Hey, this is Justin with DaytradeTheMarkets.com on Wednesday, June 26, 2013, and wanted to do kind of a piece-by-piece build of a chart, starting with a naked chart or just a price chart. Kind of build with each piece of information or piece of evidence, piece by piece, and kind of talk about what each piece means to help you make better sense of the market. And I thought I would just do it with a different market than I normally talk about, just to give that as an example. Normally I talk about the index markets like the E-mini S&P or the mini Dow or even crude oil, gold. Those are the markets I tend to focus on personally, but you can use this on literally any market, any time frame. So thought I'd just use the DAX. We had a nice move in the DAX today, so good illustration. So if you're in Europe or you trade the DAX, or even if you're in the US or North America and want to trade early in the morning, I've got this chart starting at around 2 a.m. Eastern time. So just as an example, a lot of different options for different markets all over the world. So anyway, this is a 3-minute chart. This is when I look at a DAX chart, I like a 3-minute chart because it's kind of a longer day. You could certainly apply this to, again, any time frame. But here's price. I want to talk about each piece. The first major piece of evidence that we look at are what we call relative aggression bars. And just as a bit of a review, or if you're new to our site, relative aggression bars are intriguing because these are real-time order flow data-driven indicators. They're not, what they call technical indicators, or they're not telling you what happened with price in the past. They're telling you what's going on in the market under the surface right now. So instead of looking at, for example, a car from above, that's price, you're looking at the accelerator and the brake. That's the idea here. So you're getting a kind of a head start or a peek as to what's truly going on under the surface of the market, because its order flow actually leads price, and the market only moves when buyers or sellers are more aggressive than the other side. So what this software does is it tells you, number one, in real time, which side, buyers or sellers, is more aggressive. And then number two, and more importantly, in a relative sense that's easy to see visually, to what degree that aggression is taking place. Is it moderate buying or selling aggression? Is it strong buying or selling aggression? Or is it extreme buying or selling aggression? And it's especially important to look at these level 2, or what we call strong buying and selling aggression. They don't happen all that often. And then these level 3 or extreme buying and selling aggression. And what we like to think about kind of as the first building block is when you get a level 2 or especially a level 3 buying or selling bar, for example, a buying bar, can the low hold, and then do we have follow through higher? If so, short term, the market's poised to move higher. 80-90% of the time. It's never 100%, but it's a very, very high percentage of the, kind of a roadmap as to what's likely to happen in the market. Same thing with a level 3 selling bar. If the high of that bar holds and we get the low taken out, it's a very good probability the market's going to continue lower, and vice versa. So if we go back to our naked chart here, and I throw on the relative aggression bars, and I'll just put on the level 2 and level 3, so the strong and the extreme. Let's have a look at that. Okay, so now I've added to our naked chart the relative aggression bars, just the level 2 strong and level 3 extreme, okay? And so again, we like to ask ourselves, when this happens, is there follow through or is there rejection? So the first aggression bar of the day is a level 2 or a strong selling aggression bar. And so the first question we ask ourselves is, can the high of that bar hold? And can we get some follow through below? And by follow through, we typically mean a full bar, or at least some time, some volume below there, not just a little, test like we have here. Okay, so you can see we don't get much follow through early, and then when we test the high, it pauses for a bit, but we really don't have any. It doesn't contain it. It's this level 3 selling bar is rejected. So that doesn't necessarily mean buyers have taken over. It just means this first push lower has essentially failed. Okay, and you put this in context with the bigger picture bias to make even better sense of that. I'm not going to get into that right now, but that is something that we also talk about. So the first structure that we've seen is essentially won by bulls. So it's telling you, be careful being on the short side, and you might want to look to be on the long side, just as a first building block, a first step, okay, first way of making sense of the market. Okay, then the next structure we see is a level 3 or extreme buying aggression bar. So again, we ask ourselves, can the low of this bar hold, that'd be the first expectation, and then can we get the high taken out? And you can see that is exactly what happened. So at this point, it didn't even test toward the low, and it just took out the high, and then pierced it on a level 2 bar, and then here's another level 3 bar, same idea. So that's showing us in real time, bulls are completely in control of this market in the short term, okay? So now, I'm not going to get into different trade entry ideas, because the first step is really judging which side you don't want to be on, and then which side you do want to be on. So this is telling us don't be on the short side. Okay, bulls have taken over clearly. You want to be on the long side. Okay, so that's kind of the first step. Now, the first potential place where bears step back in, you can see there's a level 2 or strong selling aggression bar, and that contains the market for 10-15 minutes or so. You can see we tested to the high, and then we tested back toward the low. But then what happened? Where do we get a full bar above? Just as a general. Or full bar above or below, just as a general rule, it's above. So again, it's telling us this attempted move by sellers was rejected. We still have a buying wave in place. Okay. Now we have a situation here where we kind of pause in terms of strong. There was some level 1 activity in here, and there's some other activity which I'll show, but it's showing us there's no selling activity certainly. So you're not gonna. It's not telling you to be on the short side. It's telling you still want to be on the long side, and until something changes, you want to be on the long side. We have basically a wave of buying that's taking place. Okay, now here's another level 3 bar on the high of the day. So we ask ourselves, can the low hold? And then can we get follow through higher? Well, the first thing that happens is the low does hold right in here, and then we test back to the high. But we can't get any follow through higher. We test the low again right here. We go test the high again, and here's a level 2 bar. So at this time, I would certainly be thinking this thing's is poised to move higher, but it doesn't. The very next bar, the low is taken out. So then we get a full bar below in here. And so what is that telling us? Is it telling us that sellers have come in? No, it's not telling us sellers have come in. It's just telling us this pure wave of buying, where every battle, so to speak, has been won by the bulls. This is the first time that a bullish structure has not had follow-through. So it's telling us not that sellers have taken over, but now we're, instead of a vertical bullish up move, now we're in more of a two-sided market, okay? So then the next move lower, and this will make more sense as I add other indicators, we test into a support zone, level 2 selling bar, again, no follow-through. We pause here on the high for a while, but then we get rejected. So again, it's telling us buyers are back in control, okay? So one-sided buying, well, let's kind of review this. And I know I'm taking a while with this, but this is really an important concept. This is kind of the first building block. Rejection of selling tells us that you don't want to be on the short side. Follow-through of buying tells you that bulls are in control. That's confirmed with rejection of selling. This is, nothing has happened here. This maintained its expectation. We didn't make new highs, so it's a bit of a red flag. And then this is our first bullish structure that doesn't have follow through. So it's telling us, okay, vertical wave buying. Now we're in more of a two-sided market. Okay. If sellers are really taking over, they'll get some follow through here. That's not what happens. You can see we pause here for 20-30 minutes toward the high of that bar, but no follow through lower. Okay, bulls are back in control. Okay, does that make sense? The next, that's just the first building block to help you stay on the right side of the market, and that alone is very powerful. If you can avoid being on the wrong side of the market, and you can more often be on the right side of the market, you're putting time on your side. You're putting the odds in your favor just with that information alone. Okay, so that's the first piece of information, the first piece of evidence, and that's something that is really important. These relative aggression bars. It's very unique information that is really very helpful. I've found it incredibly helpful, certainly in my trading. And if it certainly is not what I would want to do, but if I had the choice of only one thing in the whole world to use, I would just use these relative aggression bars. I could do well with just these relative aggression bars. Now, when we add to that, which I'll show, I think you can have even more evidence, but that alone I think is extremely powerful. So the next thing I want to talk about is what we call high velocity moves. And a high velocity move is essentially a redundancy on these level 2 and level 3 aggression bars, in that if you get a high velocity move, it's just kind of a double check or a fail safe that you are seeing the markets moving quickly. Okay, so let me throw those on the chart next. Okay, so we've added the high velocity moves to the chart, and you can see there's kind of a blue shaded box right there and a blue shaded box right there. So again, it's a bit of a redundancy in that it's telling you same idea as say a level 2 or level 3 bar. We ask ourselves when one of these forms, but this is made by buyers clearly, can the low of that hold, and can we get follow through above? Same logic, same thing here. Can the low of this hold? Can we get some follow through above? Okay, so that's the thinking on high velocity moves. It's just another basically the same logic, but another way of getting to that information. Okay, that's high velocity moves. The next thing I'll talk about is we'll throw on what we call our intraday filter. So let me pause the chart and put that on. Okay, so what I've done is I've added to the relative aggression bars on the high velocity moves the intraday directional filter, and that is this bar at the bottom of the screen, which has basically 5 options. It has a gray or neutral, it has a light green for bullish, a dark green for very bullish, and a light green again for bullish, a light red for bearish, and a dark red for very bearish. And obviously those colors are changeable to whatever you like. But the idea here is with the filter is it's telling you the path of least resistance in the short term is to the upside, very strongly to the upside, and still to the upside. Okay, is this something you should trade blindly and only take long, or never take a short if it's green? Not necessarily. The way that I like to look at the filter is, if you're looking at other pieces of evidence and you're thinking about taking a long trade, for example, and the filter's green, all the better. That's adding another 1, 2, 3% edge to your trade. If you're thinking about a long, however, and the filter is red, it doesn't necessarily mean don't take the trade or blindly don't take the trade, but it's just saying you better think twice. There is some evidence with the order flow in the market, there is some evidence that you might want to be a little more careful. You might want to really, think about this trade a little bit longer. Okay, it doesn't mean don't take it. It's just another tool that's going to add a little bit more confidence or a little bit of a kind of a second chance or a think twice type of an indication. So that's the filter. That's a nice tool again to help you stay on the right side of the market and avoid being on the wrong side of the market more often. It's not about being perfect. It's about more often putting yourself in good positions to be successful. Okay. Next thing we'll talk about is what we call real-time support resistance zones. So let me throw those on there. Okay, so I've added the support resistance zones on here as well, and you can see these are the green and red or sometimes yellow zones. Okay, and what these are telling you is, and I've got these carried over from yesterday in this chart example to show some red. The red is telling you all things equal, that's a good spot to be short and an area that you'd want to think twice about before getting long. The green is telling you all things equal, that's a good trade location for a long, and you better be careful with the short. And the green is the same thing here. The yellow is basically, it's what we call a caution zone. If you think about a stoplight, red, green, yellow. Yellow is telling us this is an area that we want to monitor that would, normally be a resistance zone, for example. But because the market is showing such strength in this case, it's telling us just use caution. Okay, don't blindly accept that as resistance, but just kind of monitor what the market does in that spot. Okay, so again, how would you use this? That's the question. Well, if for example, you're thinking about a long and it sets up near a green support zone, all the better. It's adding to your edge. If you're thinking about a short and it lines up near a red resistance zone, for example, all the better. It adds a couple percent to your edge. Okay, it's just about increasing your odds of probability. Vice versa, if you're thinking about a short position, for example, and it happens to be right into a green support zone, it doesn't necessarily mean don't take it, but it's telling you better think twice. This might not be the best trade location. Okay. It also does a good job of telling you when the market is more in a consolidation phase, like we were when we opened today in here, versus more of a breakout phase, like we have when we break through it. Now more of a consolidation phase in here to more of a potential break when this turns over to more of a potential breakout. Now I know the market closed at that point, but that's the idea. So the support resistance zone is just another tool, another piece of evidence to increase your edge another percent or two. Okay, and that adds up. If you can avoid a few mistakes a month or get into a couple more good trades a month just from one of these tools alone, obviously makes a big difference to your bottom line. So finally, let me just show what we call the deceleration and divergence indicators. Let me throw those on there. Okay, so what I've done is I've now added the deceleration and divergence, and these are these diamonds or triangles and circles that you see. And basically what these are telling us, for example, if we look at this one down here, we have a bar that has a lower low than the prior bar. However, within this second bar, the level in this case of selling aggression is actually decelerating or slowing down. It's as if the market's hitting the brakes, so to speak. Okay, so that's the converse of that is if this bar had a lower low and the level of selling aggression was increasing, then we would expect this market to head lower. But because in this case this bar, which has a lower low than its prior bar, has selling aggression that is decelerating or decreasing, we would expect short-term the market would move higher. Okay, same thing with these. These are very, very short-term indications, and sometimes people see dots and triangles and they think these are trade entry ideas or, you know, take a trade like a system. That is not what these are. These, again, are just a little bit extra. I think sometimes, you know, you can read too much into decelerations. These are just a little piece of extra information where if you already are thinking that you want to be on one side of the market or the other. For example, we talked about this earlier when we had this breakout higher, we had the rejection of the selling, we had a breakout higher on level 3 buying aggression. Well, now you're saying, okay, I want to be on the long side. Now it makes sense to perhaps use one of these you know, deceleration bars for trade entry. But it's the same thing. You don't want to just trade these blindly. You don't want to do anything blindly in trading, in my opinion. You want to, you know, look at the evidence that you're seeing, which side's in control, and then if you have other reasons for doing it, the decelerations can be really nice trade entries, or they can be, you know, heads up that the market's turning if you're already in a trade and that sort of thing. So again, these are another 1 or 2% addition to the edge, to your decision-making process, because at the end of the day, as a trader, you are a professional decision maker, and the better you get at making decisions, the better your results are going to be. Okay, and what I think is really helpful about this is not some blind robotic system. This is simply giving you better, solid, really good information that you can then use to make better decisions. And we you know, go into a lot more detail than this in our training in terms of how to make even better sense of this and do live sessions and that sort of thing. But I thought this was just a good example or a good chance to kind of break a chart down piece by piece and talk about what each piece means and how, you know, generally speaking, you can use this. So hopefully you found that helpful, and if you have any other questions, by all means let us know, and otherwise we'll talk to you soon. Thanks.